Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. So as we look at the markets for the last week, 5 trading days, what we see is a general upward trend. It's been a decent week. But in the last 24 hours, there's been some volatility around what the Federal Reserve might do regarding interest rates. And as I record this update right now, the Federal Reserve has announced that it doesn't really plan on raising rates for the balance of 2019. And as soon as that announcement came out, the stock market immediately rose a bit, and the yield on the 10-year dropped to 2.59, which to me is just unbelievable. And then as I started following a little more about what the economists were saying about the Federal Reserve's position, what we found is that they were talking about how, what's going on now is, again, a bad thing. It's a bad sign because the Fed clearly believes that the U.S. economy might be slowing down. Therefore, it's going to keep their monetary policy as loose as it has been for quite some time. But if you dig a little bit deeper into the Federal Reserve notes, what you see is that they're talking about a slowdown in China and a slowdown in Europe. But their commentary on the United States is really quite positive, which sort of leads me to wonder, since the Federal Reserve's dual mandate has to do with basically making sure that we have a strong, stable currency and that unemployment is not a problem for our economy, why are they so overly concerned about what's going on in Europe and in China? If anything, that should make it easier on the U.S. to buy goods and services from China and from Europe. That will hurt our trade deficit, but it would certainly make it easier for us to buy stuff so that people in the U.S. can continue to spend more money on goods and services and vacations and all those kinds of good things that we seem to like to do. So what I want to make sure that people are aware of is that, yes, the Federal Reserve has made it pretty clear that they're going to keep rates at where they currently are for probably the balance of the year, but and that's generally good for the economy because low rates can mean that, it's a little easier for businesses to get money to borrow to grow, and it's easier for people to buy homes and all those kinds of things. It really is, for some people, a bad thing. And that's the sort of uncommon sense moment in today's update, is when you think about like retirees, many people who have retired in the last 10 years or so, and even before that, but many retirees saved a nest egg and set it aside thinking that, gee, I can get a 4 or 5% CD interest on my savings to augment my Social Security and pension if they get one. Well, for about the past 10 years, CD rates and interest rates have been so low that an entire generation of retirees that had literally planned on being able to use interest as a way to augment their income, they get, this news that comes from the Fed today basically means that they're not going to be seeing any reasonable interest rate, even anywhere near where it was back in 08, 09. They're not going to see that for several years to come. So while it's generally not a bad thing for the economy, and these statements by the Federal Reserve don't give us any room for concern. If we lived in China or in Europe, we might have some concerns, but we don't live there, and we don't. Most of our investments are here in the United States. So the Fed's comments are generally, from an economic standpoint, they're trying to continue to keep the economic engine of the U.S. going. So we're not too worried about what they've said, nor does it give us any indication of a disaster ahead, but we do recognize that their decisions are not necessarily good for everybody. If anybody has any questions about this, please feel free to call me or email me or text me, but that was your update. I hope you enjoyed it. If you did, give us a like, give us a share, and I'll be back next week with another Uncommon Sense update. Thanks for watching. If you'd like to be the first to hear of more Uncommon Sense updates like these, please click the subscribe button below. We'd really appreciate it. Thanks again.